Hey everyone, welcome to another real estate video. This is Javier Vidana, the real estate YouTuber in Phoenix, Arizona, helping you accomplish your home goals. Guys, I'm sorry, it's been over a month since I made a video. We are just moved out and we have a bunch of crazy stuff going on. So if anything, this has made me realize how much I love doing this, because I know it's just kind of here, me talking to a camera, but just me not making a video, I'm getting comments and messages from everywhere. Still, people are watching my videos and they're helping them. And secondly, people are missing me. So I know this community is only about to be 4,000 subscribers strong. Super pumped and excited and so honored to be part of your lives and helping people all over the country accomplish their home goals. So thank you guys so much. I promise you that fourth part and final part of our Buying a Dream Home series is coming soon. We've been moving in and things are crazy, as you know. So anywho, let's get to it. Real estate's changing, and real estate changes every 6 months to probably every 6 month increments. There's something crucial that happened. I started making videos back in November of 2017, and just in that a little bit over a year, there's been a lot of changes. Back in those days, if you wanted down payment assistance, usually the best option would have been Home in 5. It's an FHA product. FHA is 3.5% down, but in Home in 5 they would give you 3% of it, so you would only have to come up with 0.5%. Well, I have not seen a single Home in 5 FHA loan in the last 6 months. This is pretty shocking because most of you probably found me in that one video where I talk about the cost of buying a home, and one of the examples I use in cost of buying a home is using down payment assistance, and I use the Home in 5 option. Well, it's still relevant, but it's not the best program anymore. And today in this video, we're going to talk about what is the best down payment assistance program in late 2018, early 2019. The reason why I'm emphasizing the time of year that I'm making this is because maybe in late 2019 there's going to be a completely different option. Now, before I begin, your state might have this same program, but it might be a different name. The program is called Home Plus. And here's the cool thing about Home Plus. FHA, Home in 5 was just FHA. There was no different alternatives or options or routes. You either qualified for it or you didn't. But with Home Plus, there's different avenues you can take with their pros and cons on each side. And the first starting point of Home Plus is you can go either conventional or FHA Home Plus. If you have a credit score over 700, then you can go Home Plus conventional. If you're between 640 to 700, then you have to go Home Plus FHA. Well, what are the advantages of going conventional versus FHA? Well, there's not very much advantages to your monthly payment. Maybe with conventional, your closing costs might be less. Maybe you might be able to do some more creative stuff. But on top of that, the main important difference is that with conventional, just like I talk about in my conventional versus FHA video, if you haven't seen it, link is right here. Mortgage insurance will eventually drop off with your conventional product, meaning that $100 to $300 you pay on your mortgage payment will eventually drop off once you reach that 80-20 loan to value about. With FHA, you're always gonna pay that mortgage insurance until you die or refinance. Conventional also, your mortgage insurance, which is that insurance against you, which I need to make a separate video on that, is based on your credit worthiness. Whereas FHA, you get the same mortgage insurance as the next guy regardless of your credit. Regardless if you go conventional or FHA, here's the cool thing about Home Plus. You have options. You can take as little as 3% to 5% down. Now this is pretty awesome because with FHA, your down payment is 3.5% down, right? So with Home Plus, what you could do technically is get a 4% back in down payment assistance. And not only do you pay your entire down payment, but you have a 0.5% left to pay your closing costs. Or if you're being real cheeky, you can go and take 5% outright, which is gonna be super sweet because you have 3.5% and then you have that extra 1.5% to use for your closing costs. So if you're having trouble getting offers accepted, you can use that 5%, take it, and then you only have to ask the seller to pay maybe half of your closing costs, which is a lot easier to present than a full closing cost offer. But there's a caveat. According to right now, with December 2018, this is the difference of interest rates. It could change, it can go up, it can go down. Just so you know, this is what I found online. If you want 3% in down payment assistance, the interest rate's about 6.125. If you want 4% in down payment assistance, the interest rate is about 6.25. But if you want 5%, it's 6.625. You're probably screaming right now because a regular FHA, just normal without down payment, I think the interest rate as right now, once again, it could change, is about like 4 to 5% around there. So you're gonna pay using a down payment assistance program, regardless of what option you pay, you're for sure gonna be in the high, higher than the regular down payment programs, but you're definitely gonna pay on the interest rate if you wanna take the whole 5%. So if you're gonna do it, make sure you have a proper plan in place to either sell the home down the road in the next 5 to 4 years, or maybe 3 to 10 years, who knows, or because over time you're gonna pay a lot more in the life of the loan. I can't break down the exact what the difference of payment is, but what I always tell people is a normal down payment program is going to be about $100 to $200 less than your normal down payment assistance program. That $100 to $100 to $200 depends on which option you're taking. If you're doing getting 5% back in down payment assistance, which is gravy because you're getting your closing costs paid, you're getting your down payment paid, everything's awesome, right? Well, if you're going down that route, just know that you're probably going to be closer to that 200 mark, maybe even a little more higher than if you would have just gone normal down payment, regular down payment. Whereas if you take the 3% instead of taking the 5%, well, maybe it's closer to $100 more than if you just would have went with the down payment. As of right now, the income limits are about $99,000, which is all fine and dandy, right? But in January of 2019, they're gonna go up, or down rather. The income limits on FHA Home Plus will remain as $99,000. That's not going to change. But for conventional Home Plus, that's going to lower to $69,100. So if you make more than $69,100, you will not be able to go conventional down payment assistance for Home Plus. But there's a caveat, as there always is. When you underwrite a loan, you can either go Freddie Mac or Fannie Mae. A Freddie Mac tends to be more stricter. They want a better credit profile. They don't want you to be maybe more consistent. They want you to be more consistent with your job. They don't want to see like derogatory marks on your credit. They're a little more strict. They're like your hard to please grandma. There's usually two grandmas. There's one that's a little more harder to please. They have that face like this, and then you really have to make a really, really great pie, or you have to buy a really good pie in order for them to be like that. That's what Freddie Mac is. They're the really hard to please ones. If you have a better portfolio, better situation, better credit history, better scenario, you could go conventional with the $99,000, because Fannie Mae is the only one that's going to making the income limit $69,100 for conventional. So if you make less than $69,000 and you have a credit score of above 700, good news, you can go conventional Home Plus any day. Good for you. If you don't, well, you have to have a better, that's why I'm being kind of vague. You just have to have a better, package. You have to have, you're not just barely qualifying, you qualify with remarks. On the other hand, Fannie Mae is the grandma that just loves that you're visiting her. As soon as you walk in the door, she's making you food. She's just so happy you're there. You can talk to her about the most mundane things and she's happy. That's Fannie Mae. And Fannie Mae, unfortunately, she's the one that's making conventional income limit at $69,100. So if you're going FHA, don't worry, your income limit's all the way to $90,000. As long as you make less than that, you're fine. And for conventional, if you have a better package, a better portfolio, better credit history, maybe a good job history, maybe you don't have derogatory marks on your credit, you can pass the very strict grandma test, then you can go through Freddie Mac and the income limit can be up to $90,000. But if you're barely qualifying and you're really having a hard time, you barely have the 700 credit score, you're barely going through, well then your income limit will probably be $60,000, or what was the number I said? Yeah, $69,000. My last point about Home Plus program is it's the same concept as most down payment assistance program now. It's not necessarily free money from a government, but rather it's a second mortgage or second loan on your house. The good part is it's a completely interest-free loan, and as long as you stay in a period of 3 years in your house, 1, 2, 3, after the third year, it is completely forgiven, and the down payment assistance second loan is now gone. If you want to try to sell your house maybe 1 or 2 years after you buy it, well then I think you're gonna pay back So like, for example, if you live there 2 years and you want to sell it in the third year, well then I think the 2 years are forgiven and you have to pay back the 1%. I would just say if you're getting this program, you're gonna have to be in your house for a period of 3 years. And of course you have to do other things like the other programs, like take the home buyer education course, which is a pain in the butt, but you can do it online if you pay a fee, I believe. And other than that, I think it's pretty straightforward. There's nothing wrong with taking down payment assistance. My first house I ever bought was down payment assistance, and I would not be where I am if I wasn't for that beautiful little house. So there's no shame in it. If you need down payment assistance, go forward with it. All in all, if it gets you away from renting where you're just throwing your money away, and it gets you into your own very house, even though you have to take a second loan that's gonna get forgiven in 3 years, you can still move forward with it, get it, and it's your house and you're enjoying the equity of it. I will say though that most of my clients that I've seen benefit more from the conventional Home Plus program than the FHA Home Plus program, because with conventional you just have less closing costs. So maybe you're able to get some money back at closing from your deposit or work something out that way. So, but if you want to buy a house sooner and you're at 660 or 650, it's gonna take you a few months to get up to that 700 and maybe a few $1,000s, then probably it's not worth it to spend the extra money to get to 700. I guess it's more or less for people that took care of their credit and are above 700, enjoy the benefits and reap the benefits of that. Maybe if you're at 690 or 685 and you're close to 700, then take a month or two to get it there. But if you're above a 640, then just go use the FHA route. There's nothing wrong with that. So I hope this video helped you guys. Thank you guys so much for watching. If you're interested in buying or selling a home in the Phoenix, Arizona area, I am your guy. All my contact information can be found below and my website is here. And of course, any of you are welcome to always email or text or call me. All my contact information is found below as well. I think that's it. So once again, the Dream Home final video is coming out soon, so stay tuned for that. Thank you guys all again. I appreciate you and have a wonderful day.